In my previous video, we discussed the different methods of risk management on a trade. So how much to risk on a trade, you go with a fixed lot, a fixed dollar amount, or a fixed percentage per trade. I mentioned the fact that this was one thing that can help you out grow in trading faster. Like, risk management always has two purposes: to be able to protect your capital and to grow your account. Now, that's all good, and I think there's another thing that can help you a lot grow in trading, and that is adding to your account. Now, for some people, they will gather money from their job, add to their account in one shot, put it all at the same time, and trade with that. And that's good, but that's not ideal. Some people are going to take a little bit of money from their job, put it in their account, and expect it to grow really fast and really big quickly. And again, that's fine, but that's not the best way to do things. What's up, traders? Welcome back to Montreal in Canada. I'm going to be leaving here in one day, so tomorrow, taking a flight to Bangkok again in the hot weather, which I highly prefer to the cold weather. Today I want to talk about how and when should you add money to your account. So I mentioned the fact that people should save up between 10 to 20% of their income from their job to invest back in trading after. Now, if you do this right, you will over time accumulate some income on the side that you can invest in your trading, and you should invest it. That's the best way to grow. That's the fastest way to grow in trading. It's to get capital from outside and bring it to trading. But you need to know how to do this, when to do this, and how to do this. So this is a question I got on Instagram. If you're not following me yet on there, I suggest you follow me right now. The link's gonna be below for that. Let's say you have a job where you make roughly $100,000 per year, which is a fair estimate. It might be lower, might be higher. That's totally fine. I would suggest when you deduct taxes from this, let's say you get out with 50,000, we'll just give like basic numbers. You will be getting basically an income per month, and from that income I suggest you take out 20% of this, put it aside, save it, and that's going to be money you invest in your trading account later. Now, the reason we say later is because some people are just going to take that money, put it back into trading right now, and if you're not profitable, if you're not having the result that you want to have, that's not a good thing to do at all. That's a bad thing to do. So you want to be able to put money in your account when you meet two different criteria. And these two criteria are very simply, first of all, you need to have the right results and the right mindset. If you don't have one of these two things, then don't put money in your account. That's a waste of time, waste of capital, and you will probably end up losing the capital you put in your account. So here's how this works. First of all, you need to have the right results. And by results, we mean the right win rate. It must be positive, and it must fit your backtest. So these are two things that are different. Positive means like you make money, that's all good, that's all fine. But think about the fact that your results that you get on the live account needs to be following your backtest. If you don't follow your backtest, it's like too good, and like you have like a big up move of returns, that's good, but they don't follow your backtest, which means that in the future they might come back down and crash. So all big moves to the upside has a similar tendency to the downside. So if you have like a really good return for some time, for like a month, you're super happy and stuff, then the next month it might crash, and that's usually what happens. But if your results are following the backtest you've done before, then that's a good sign that you're like in the right kind of frame to go upward, and that's a good thing. That would mean that you can add to your account at this point, but we have one more step to go through. And let's say your results are kind of lower, so like you're losing money, and that's not in the backtest perspective, then don't add money to your account. That's stupid. That's not the right way to do. That's not the right thing to do at all. So you want to have these things in common. So first of all, in terms of results, similar to your backtest, and positive. Those are two things you need to think about and consider all the time. Now, the other aspect of this is your mindset also needs to be on par with your results. By that we mean like if you feel like adding money to your account now is not a good fit, like you would be stressed out, you'll be anxious, you'll be kind of not confident when you trade this bigger amount, then don't do it. Or maybe do it, but find a plan for you to be able to progressively go to a higher amount of trading. So let's say you are trading $10,000 and now you find yourself with like $50,000. That jump might be quite big to do. You might not be like at the right mindset to do that jump. And if you are looking for help on this, on the mindset part, and being able to kind of grow and make a plan to grow faster, we have a course in the academy about the topic. We teach you how to, first of all, master your mind, master your mindset, and then how to make a plan for your business to be able to grow, move forward, and evolve in trading. So that's really helpful if you want to be able to kind of take things to the next level we can help with that for sure. So link below for that as well. Now let's say that your results and your mindset are both on par and at the right level to be able to add to your account. So it's positive, similar to your back test, and you feel like you can handle it. You feel like you're at the right level, you can like trade more money without any problem. Then that's where you add to your account. What I suggest people is to not add more than 10 to 20% of your account per month or even per quarter. Okay, so basically if you have $10,000, don't add more than like $1,000 per month. That's the rule of thumb. I found that people that add more than this tend to be more uncomfortable. They tend to make more mistakes, and then they come back looking for help, and that's not a good thing. So you want to be able to kind of add money. It should be a kind of small stretch, but not too big, where you have to kind of reinvent yourself and look back at your psychology and work on everything. That's not a good thing. So enough of a move outside your comfort zone, but not too much where you have to work hard. So every month where you meet these two criteria, your results and your mindset, that's when you can add to your account. So you will add between like 10 to 20% a month or a quarter, as I said before, and that will be every month. If a month you don't meet these two criteria and you don't have the result that you are supposed to have, then don't add to your account. Okay. The other thing you need to consider too at the same time is, even if you have a good result and a good mindset, did you respect your plan? Right? Did you respect your plan all the time or most of the time? And what really good traders do, which we discussed in the academy as well, is they track their compliance level, how compliant they are with their plan. If you trade and you get a really good result, but you're not following your plan, that's worthless. But if you trade and you follow your plan, that's a good thing, right? Even if you have like really bad result, if you follow your plan, it should be back to good result pretty soon. Okay? So you want to be able to kind of look at your results, your mindset, and your compliance level, which is really important. And if you meet all these criteria every month, then add to your account. But make your plan before that. Don't just like come every month, oh, I'm gonna add like 20% this month to my account because I feel like I should add it. No, that doesn't work. You plan first, you make a plan of how you will grow in trading, and then once you reach these kind of levels, you add to your account. This is called a graduation plan. We discuss this also in the academy, how to graduate and move forward in trading. Really helpful to be able to not like second guess yourself and just increase your level over time. And so that's pretty much how I do it. So to recap, 10 to 20% of your account that you add every month, and if you do this right, then you should kind of maybe add more money to your account. Your pile of money on the side saved up should decrease a little bit, but should not decrease too much because you keep adding money there from your job every month. So even if you add back to your account, you still have money on the side to invest in your account. And so that's like an infinite cycle. So from now until you leave your job, you will have more money to put in your account. And that's really, really good because like you never run out of money to add to your account. And if you do things right, you can really scale your business quite fast with that kind of principle. Okay, so in 1 year, you are able to kind of double your account from the capital you invest, and that double your account can mean double your return, and that's pretty good. So that's how you do things. So reinvest 10 to 20% of your account back in your account every month or every quarter. You decide how you want to do things, and then do this only when you meet the two factors plus the compliance. So your results, your mindset, and your compliance level, of course. You want to be compliant, following the plan every month, and that's how you add back to your account. So let me know your thoughts down in the comment section. I want to hear what you think of this principle. I've been using this myself. My students use this all the time, and they see pretty good results with that. Here are a few comments from the past video. I appreciate you guys leaving your comments as always in the comment section. Subscribe if it's not done yet. Check out the links below, of course, for more details. And I'll catch you back here in the next video. Ciao.